I think where Wall Street gets it so wrong, and where I think I've had some good calls, is like I called the ball on Twitter when they were a $12 stock, and every analyst had a sell. And I said, this is a drawer stock. In 10 years, I'll be using Twitter to get my news. And I know I won't be using Facebook, and I probably won't be using Instagram, but I know I'll be using Twitter. So I thought their day 365 retention of me, and a lot of people like me, is going to be really, really high. All I have to worry about is, can they eventually monetize us through ads? Yeah, I think they can. So I said, I don't care, I don't care about their multiple of EBITDA today. I just think, they're worth $9 billion. They had terrible stock-based comp. They were making $800 million a year. They're paying out $800 million a year in SBC. And so it made no sense. But I bought it and tweeted it, and Jack Dorsey retweeted it because that was the only positive. And then the other thing I'd like to do, I'll just give you a little hack if any of your listeners want to day trade. If there's a company that you believe is a drawer stock or generational company, and they announce bad earnings, if they still have a founder at the helm and they get crushed, you might have a generational buying opportunity. We saw that 2 years ago with Meta.
Yeah.
They had a terrible quarter, right?
Yeah, that was incredible buying opportunity. Yeah.
And I will honestly say, I bought the stock. I bottom ticked it at 89. Okay. You also had that opportunity with Spotify. They traded below their IPO price. They went down to $85 a share. Daniel Ek bought the stock himself all the way up to like 110 a share.
Yeah.
It's these are hiding in plain sight.
Yeah. You can just go through the list of, especially recently, AppLovin was just such a great buy, right? Because generational founder, right? So you just have these, like, you have ones that like
Roblox 4 or 5 months ago, they had a bad quarter. The stock went to 30, 32. It was just a no-brainer. Like, it just close your eyes and pull the trigger. I mean,
all right, no, I don't know if you remember this, but we met 2001, long time ago. And I literally remember meeting you for the very first time. And you just sat me down and you said, Auren, you need to buy the stock in Choreo. I don't even know if you remember Choreo. It was this fallen.com. And you just put a bunch of money into it. And at the time it was 50 cents a share. I thought you were crazy. And I did not follow through or buy the stock, but I followed it because I'm like, okay, this crazy guy, Mark, told me to buy it. And it went up I think it went up to $10. So it went up from 50 cents to $10 in like 6 months. It was like a 20x return. And okay, since then, I've always just thought you were just like the most brilliant investor. But that was not like the founder had left. It was there was, all these problems.
Well, I call companies like Choreo, I lovingly call them broken internet companies.
Yeah.
And I have a strategy that if it's,
at the time, I think it was trading below cash or something.
Yeah. If the founder is still there or owns a lot of it, has influence, sometimes you get a ghost ship, which is what Twitter became. But if the founder is still there and has influence, and it just makes no sense, you can just back up the truck as long as they have a durable, franchise or business, and these, usually do, pay off. And you're going to probably make at least 50% when they just right the ship. I mean, when I came back to Zynga in 2015, the day we announced that I came back as CEO, the stock went from like 4 to 2 something, went down to $1.75. We were trading for like cash in the bank.
Right. That would have been such an obvious buying opportunity. Yeah.
Yeah. Just back up the truck. When Steve Jobs came back to Apple, traded for cash in the bank. It was like, you're getting a phenomenal, one of the world's greatest founder product guy for free. They were trading for $8 billion, they had $8 billion in cash. It's like, it's you get this kind of free call option. And by the way, I do tweet these when I say I'm back at the truck.
You do.
I always tweet it. I tweeted about PayPal, Snap, Twitter. So
you're very generous with telling people to follow your things, but you've never done a public fund or anything.
No, I don't think I would be well suited for that because, I go through so much volatility. Look at my Snapchat position. I mean, I think my average is like 820 a share. I just bought more of it. By the way, it just went down below 9 again. I bought around like 870. I bought up to 950. But it's so volatile. And during the pandemic, it went to 70. It went from 670 a share to 70, back down. It's been trading between like 8 and 16 or 17, and Wall Street, the hedge fund people like it, then it doesn't deliver in the short term, then they all dump it. And I just think if you're willing to sit through that volatility, you're going to get rewarded over 3 years or 5 years. It's really hard for a hedge fund, though.
Yeah, totally.
I don't want to show
don't want to do that. Yeah.
50%. I mean, right now, I own Alibaba, right? That's a really risky stock. If things work out between Trump and China, and he's just trying to cut a good deal, it could be like one of the great stock buys of all time. And if it doesn't, it could really
right.
bad. So
the nice thing about investing your own money is you could invest in a different, more long-term way, and you could take different risks than if you're investing other people's money.
Yeah. And sometimes you get things that I think are just an absolute no-brainer. Like January of last year, I backed up the truck and bought a big position in Google because they were trading for, I think, I don't know, like 15 to 17 times EBITDA. And there was a headwind because of AI.
Yeah.
They hadn't made any AI announcement.
Yeah, and they're still growing super fast. Yeah.
Yeah, they were growing at like 20%. And everyone thought they were going to get rolled over, because of AI. And I was like, no way, this is going to make people more interested in search.
Yeah.
And there's no way Google does not have AI stuff to announce. So I thought you're clearly going to get an AI boost, even if in the long run you're wrong. So I thought that was not huge upside. I mean, it's actually up like 60 or 70%, but I thought you had like kind of a guaranteed, 15% a year.